$928 million. That's how much this one company lost in the third quarter alone. Another $80 million. The real estate market has shifted and companies are scrambling to make profits, and it is getting very, very interesting. Guys, thank you so much for joining me. My name is Matt Bogosian. I'm a real estate agent right here in Middle Tennessee. In today's video, I want to talk about a article that came out on Inman talking about the third quarter earnings results of real estate companies, and specifically one segment, which is iBuyers. If you guys don't know what an iBuyer is, according to Google, an iBuyer is a company that uses technology to make an offer on your home instantly. They use technology and algorithms. iBuyers represent a dramatic shift in the way people are buying and selling homes. It's meant to be convenient for sellers and easy, and a way that they can sell their home and move on quickly and not have to worry about dealing with somebody like me. So let me pull this article up. Here we go. So the title of this article is Billions in Losses, a Brutal Market and More from Q3 Earnings Season. So it starts off talking about how real estate companies reported third quarter earnings, which would be from July to September, and they weren't good. But some were a lot worse than others. And that's what I want to talk about today. As you scroll down, there is a little headline here. iBuying is facing an existential moment. Let me blow this up here. iBuying is facing an existential moment. The single most significant number that came out of this earnings season was $928 million. It's the amount that Opendoor lost in the third quarter alone. They absolutely got hammered. If you guys don't know what Opendoor is, it's an iBuying company. You can go online and say, I'd like to receive an offer on my home, and you click. It's not instant though. They say that it's instant, and it is definitely not instant. It takes a couple of days for them to process some things. They require that you do some things like take some pictures and send them in, stuff like that. So it's not instant. I think they throw around that instant term a little bit too much. The company was quick to point out that the losses weren't purely in cash, but rather were due to adjusting the valuation of the homes the company currently had in its inventory. Okay. All right. So you guys bought a bunch of homes for way too much money, and now you're stuck sitting on them and you have to sell them for less. Okay. We get it. Good business. Still, it was a startling large loss, and it sent Opendoor shares plummeting to a new all-time low of $1.46. Well, Opendoor shares have been plummeting for like a year and a half. They were at $35 at one point. So they didn't do well in 2021. Now they're not doing well here. So what kind of market can they do well in? I don't know. Rival Offerpad reported earnings a day earlier and revealed it had lost $80 million. A much smaller number, but also one that reversed several months of profitability. So of course, that also sent Offerpad shares tumbling. So these numbers highlight two issues for the iBuyers. The longer term issue is whether or not the iBuyer model even works, especially in a market where prices are static or falling. iBuyers think it does, and they're going to try to shuffle and reevaluate their business and make changes to make it work. So we'll see if that happens. But another piece of significant news is Redfin, which is the third of the remaining big three iBuyers. In a blog post, CEO Glenn Kelman described iBuying as requiring a staggering amount of money and risk for a now uncertain benefit. So he went on to announce this earnings season that Redfin's shutting down its iBuyer operations. They're done, throwing in the towel. Not worth it, too much risk, too uncertain. Similarly, Zillow's Rich Barton said in his company's earnings report that he's glad to have abandoned iBuying last year. So two pretty big companies in the real estate world said it's not worth it. We're getting out. We're done. Zillow and Redfin. The second issue iBuyers face that's more immediate is if they can't turn around their stock performance, they face the risk of getting kicked out of the market. That's because if a company spends more than a month trading below $1, it can be delisted. Something that would make it far harder to trade and which would be a devastating symbolic blow. Basically, if you fall below $1, a lot of people feel like you're not a legitimate company and not worth investing in, and they get out. They sell their stock and they say, I'm done. So that'll be interesting to watch to see what happens. Offerpad shares last rose above $1 earlier this year. Opendoor shares haven't fallen below the dollar mark, but they're heading in that direction. So there you have it, guys. A lot of interesting news coming out in the real estate market. We're seeing a lot of changes. Companies aren't doing well, specifically real estate companies. And even more specifically, these iBuying companies, they are hurting. It is just a model that has not really been working. So we'll have to just keep an eye on them and see if prices kind of stabilize and they can start purchasing homes and selling them for a profit. Guys, thank you so much for watching. Like I said, my name is Matt Bogosian. I'm a real estate agent in Middle Tennessee. If you need help with anything real estate related here in the Middle Tennessee area, I've got a link down below where you can schedule a quick 15-minute phone call. Thanks. We'll see you next time. Bye.